A $50,000 investment in either SCHD or DGRW for any long-term buy and hold dividend growth investor, in my opinion, could be a great opportunity long-term. And this is because both SCHD and DGRW both have characteristics of growing ETF price long-term. But not only that, both of these ETFs have a rock-solid basket of holdings, a nice bit of dividends that are paid from day one, and some substantial dividend growth historically. But in this video, we're going to be digging deep into both SCHD and DGRW and seeing which of these dividend growth ETFs would be better off invested into if an investor for whatever reason had $50,000 to spend. Now, if you hold either SCHD or DGRW or consider yourself a dividend growth investor, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first, just for some background, if you guys are not that familiar with either one of these ETFs. First, SCHD or the Schwab US Dividend Equity ETF is a super popular dividend growth ETF that has been around for a while now. This ETF offers a very cheap expense ratio, an objective of tracking as closely before fees and expenses the total return of the Dow Jones US Dividend 100 Index, and all in all, SCHD has a track record of paying dividends, growing in ETF price, and paying more and more in dividends historically. Now, DGRW, on the other hand, has some characteristics that are similar to SCHD, but some others that are different. It says right here on the website that the Wisdom Tree US Quality Dividend Growth Fund seeks to track the investment results of dividend-paying large-cap companies with growth characteristics in the US equity markets. Now, DGRW came across my sites a while back, and once we dig a little bit deeper into this one, I promise you're going to see exactly why I'm so obsessed with this ETF. Now, like I said earlier, honestly, if an investor wanted to invest long-term in either SCHD or DGRW, and if this investor was looking for an ETF that not only pays a dividend consistently, but pays more in dividends over time, and has appreciated an ETF price long-term, I would honestly say that either SCHD or DGRW are both great candidates. And although these two ETFs have a lot of things in similar, even the way that they've traded long-term look pretty close, these ETFs do have certain things that make them very different. Now, for starters, since 2011, SCHD is up around 211% plus as far as ETF price, and side note, that's not even including dividends. Now, DGRW since around 2013 is up 206%, not including dividends. But DGRW does have a much more expensive expense ratio at 0.28%. Now, one of the biggest differences between SCHD and DGRW, and this is one of the main selling points for DGRW, at least if you ask me. If we look at SCHD's holding breakdown, the majority of the ETF as of right now are in things like financials, healthcare, consumer defensives, and the top 10 holdings in SCHD, although I am quite a fan of many of these are somewhat boring companies that don't necessarily have as much explosive growth potential, at least compared to DGRW. Now, DGRW's holding breakdown, in my opinion, is much more favorable, especially being a 31-year-old investor, having some time down the road ahead of me, because with things like technology, healthcare, and industrials making up the majority of this ETF, things like technology do have the potential to grow a lot faster, but also are going to bring a little bit more beta into the ETF. Now, it's no secret on why I'm such a big fan of DGRW, and it's pretty much because of the top holdings. The fact that Microsoft and Apple make up such a large portion of this ETF altogether. I'm super bullish on Microsoft and Apple long term, not to mention there's plenty of names within the top holdings that I'm a huge fan of long term. Now, if I were to stack up SCHD and DGRW and sort of share with you the worst part and the best part of each of them, I would say for DGRW, it's the fact that the expense ratio is pretty expensive compared to SCHD, but DGRW's top holdings and holding breakdown are ideal in my opinion. Now, for SCHD, I would say that the dividend growth has been amazing, at least long term, but the top holdings aren't necessarily my favorite stocks throughout the entire market. Now, if you're a dividend growth investor, one of the main things you're obviously concerned about, and for good reason, is the dividends and dividend growth rate. Now, for SCHD, the current trailing 12-month dividend yield is around 3.37%, so for an ETF that offers some growth potential, at least has historically, and some decent dividend growth, considering SCHD has a 8.56% dividend growth rate on the 3-year, a 3.37% starting yield is not bad whatsoever. Now, DGRW's trailing 12-month is 1.61%, so about half that of SCHD. Investors are not going to get as much exposure to cash flow if they were to invest into DGRW versus SCHD, so that's something to be aware of if you are an investor, perhaps, that wants cash flow and wants it badly from day one. Now, something also to mention is the fact that DGRW does pay a dividend monthly. Some investors love that, some investors don't really care. And although it does pay a dividend monthly, the dividends are different, as you can see, depending on the time of the year, etc. Now, one of the main selling points for SCHD, one of the main reasons on why I'm currently building out a position in SCHD very, very aggressively right now, is the fact that the dividend growth historically has been amazing. Although, to be fair, over the last few quarters, the dividend growth has slowed down a little bit, but zooming out, looking back over the long term, SCHD has grown their dividend significantly. Now, of course, there's so many different ways to compare SCHD to DGRW, and because these two are probably two of my favorite dividend growth ETFs, it does even raise the question for me quite often, should I put my hard-earned cash balance into SCHD or DGRW, or perhaps both? Now, another way to compare these two, if we were to compare the performance long-term, the total return of a $10,000 investment into both SCHD and DGRW, and this is with dividends reinvested over time. Over the last 10.84 years, a $10,000 investment and dividends reinvested into SCHD would have returned 230.9% total return. So that's price return plus dividends included, 230+%, or an average annual total return of 11.67%. Now, I don't think any of us really mind having an 11 or 12% return per year. To me, that sounds amazing. But during this time frame, at least DGRW has performed even better somehow. A $10,000 investment into DGRW with dividends reinvested along the way would have returned 277.64%, or around 13% on average per year, or turning that $10,000 into around $37,700 and some change. So a $10,000 investment into SCHD versus DGRW over this time frame, which was around the time where DGRW started, an investor would have been better off buying into DGRW, even though they both returned a relatively strong return over this specific time frame. So now that we talked about DGRW, we went over SCHD. I shared with you their holdings, their dividends, their dividend growth, and even how much an investor would have had if they were to have invested $10,000 and even reinvested the dividends along the way into both of them. The question of whether or not an investor would have been better off investing $50,000 into something like SCHD or DGRW, at least historically speaking, an investor probably would have been better off buying into the Wisdom Tree US Quality Dividend Growth Fund. Now, that by no means means that SCHD is a bad dividend growth ETF. And honestly, there's certain things about the Schwab US Dividend Equity ETF that I think are quite better than DGRW and better than a lot of other dividend growth ETFs across the markets. But that being said, at least for me personally, I plan on throughout this year building out a position, a sizable position, into SCHD, and then later on this year, I plan on buying shares of DGRW consistently until the end of this year. But lastly, most importantly, I want to hear from you guys down below in the talks of SCHD versus DGRW. If you could, for whatever reason, only hold on to one of these dividend growth ETFs, which one would you choose and why? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.